Hello, subscribers and audience to Accounting Weekly. It's nice having you all back again for our podcast. It's actually the second podcast for the day, and my guest today is Dr. Stephen Firer, the CEO of FirerForensics, but I'm sure also a well-known auditor, been involved in the profession for many, many years. I'll ask him now just to give us a little background about himself and where he's been working and what he's been doing currently. He's also on the Financial Reporting Standards Council, so we're very honored to have him here with us today. A little bit about ourselves. I'm the editor for Accounting Weekly. My name is Nicolaas van Wyk. I'm also the CEO of the Chartered Institute for Business Accountants. And the AW is our publication where we do a lot of technical support for accountants in practice mainly, where our team sits and looks at the engagements that they have to do and try and guide accountants and tax practitioners on their various duties. We receive the complaints and the requests from members. If it's a SaaS system that they're struggling with, we then can investigate and consider and provide possible amendments or submissions to SaaS or guidance notes on how to bypass or utilize the SaaS system. So you can go to accountingweekly.com and read all these articles and guidance notes and template working papers and the like. What we also do is we recently started these podcasts where we interview influential people within the accounting and tax profession. And today we're talking with Professor Dr. Stephen Firer. And it's going to be an exciting talk. I'm looking forward to the insights. And the reason I wanted to interview Stephen was I saw in a post that he just published a book on ISQM. And I know that's very relevant, not only for auditors, but possibly for all engagement providers, whether it's review or factual finding or compilation. I thought, let me invite him on Accounting Weekly for a general discussion on quality, specifically audit firms and why he wrote the book. And then we'll move this probably to other providers as well, as I said, with reviewers and compilers and the like. And then I have his LinkedIn profile open. I see he's a prolific article writer. There's quite a number of them. We'll also speak about some of those articles that he's been posting. But let me hand over to Stephen. Stephen, please provide us, for those that don't know you, a little bit background about yourself.
Good morning, everybody. And thank you, Nicholas, for inviting me. And for a change, I'm not listening to, I've always listened to other people and I can talk and talk and talk. But this is so important, everyone, this quality control. And it's not only about quality control for auditors. In generally speaking, it's quality control for all accounting, or what we call independent accounting professionals. And it's important to note that I love my profession and it's given me a living throughout my life. I'm 65 years old now, and it all began, I think, many, many years ago in the early 80s, where I started tutoring as a third year accounting student, and it took off from there. And having a very, unfortunately, very academic family, orthopedic surgeons, professors of finance, Colin Firer, all these things made me feel a bit inept. Even though I was passing my exams generally, my cousin called me over one day and said, you know what, Stephen, if you want to become well-known in academic circles, there's one profession that's never been touched. And he said auditing. I thought, oh, never. Auditing. And he was absolutely right. The auditing profession, whether it's, and forget about the word auditing, assurance. And I include compilations because for me, compilations are assurance. There's no doubt about that. The minute you put a practitioner's name to the bottom of any report, that's assurance. Doesn't matter what the RFAC say. And I started being interested in what the auditing problems were. And believe me, auditing problems are big and assurance problems are big. It doesn't matter what profession you're in, quality has always been the issue. And what we talk about quality, everybody knows the act. Everybody knows the legislation. Everybody knows what to do. But to write it down and to have quality and communication skills in what you tell a regulator or what you tell Nicholas when he comes to hunt you down because you've done something wrong is a different matter. And that's what I believe in. It's writing down the right thing. And believe me, ladies and gentlemen, what you write down is the right thing. Because if you write it down in a special way, no one can question your diligence. I mean, I've got away with a lot of nonsense, believe it or not, only because I've practiced this diligence, and no one can say to me, Stephen, you didn't do your work. You didn't do your homework. And I feel it was time, especially with these new standards, ISQM and ISQM1 and 2, they are long and very difficult to understand. So I thought what I would do is I'd put together some template to alleviate the burden of accountants. And that is my biggest concern. The burden that has been placed on accountants today, regulatory, the laws are going up and up and up, and the fines are going up and up and up. And believe me, every regulatory body is being concerned because of, are we doing the right thing? And this toolkit was written with a labor of love to help the profession. I didn't expect to make money out of it. And anyway, it's only selling for $10 or $15, whatever, and that's really nothing. To help auditors, assurance guys, compilers, whatever you do, even if you're a forensic auditor, this is the way to look at quality. But what it does, it gives you it's a template, it's what we call an action-based quality toolkit, where the quality is reflected in what is written into the schedule or template that I'm asking you to fill out. And that's the difference. It's not just simply a template, it's an action template. It takes the standard, and the standard says you must do this and this and this, and it shows you by action. The words I've written are key. The words are very important. If you follow the wording, it's written in simple English, you will see what you need to do. And there'll be very little things you have to think about. 180 pages. I hope people use it because it will get a lot of people out of a lot of trouble.
No, I think quality has always been a bedrock of.
And I thought I'd do it in my later years.
No, thank you for that, Stephen. Your book, is it available on Amazon? How will they find it on Amazon?
It's available on Amazon, but I mean I don't know how that comes out. I've never seen it, but you can get it through me. And me, you can get cheaper charges.
Okay. Now,
it's so important.
You've raised an issue.
I'm not saying because I wrote it. I'm just saying it will help you get through. And I've been very successful in beating the regulators at their own games
now
over the last 20
years. We'll speak a bit
years.
more about the regulators and how they see the world versus how the world really is. I think there's a difference between those viewpoints. But there's been quite a number of scandals within the auditing profession. I suppose it started with Enron and it floats down to different parts of the world. The wireframe scandal in the UK, I think, big ones. In South Africa, what I've seen, I'm not a total expert in the history of auditing, but maybe it started there with the health and racket issue. That would be now more than 20 years ago. And there was a commission following that.
Yes.
And then there was another scandal. And eventually it ended up with, there was a master bond scandal after that, I think. And another commission of inquiry, changes to the laws, separating SAICA from the IRBA, the PAIB, making it independent. And then, despite all the efforts, another bigger scandal. The latest one, I suppose, could be the Steinhoff one. And then there's the state, and then Tongaat, and then there's the state capture, which was the biggest of all. And each time there was this misstep, and I said, when I did my reading about all these scandals, then it's always very plain, obvious mistakes that the auditors make in the working papers. It's as if they're just not having a schedule verifying something. And it's small things. It's not like complex audit formulas that they miss. It's just not keeping a proper working paper. That's the one aspect. The second one is then, despite all the reactions by the regulators,
absolutely right. It's the smaller things that are getting us into trouble. And Nicolaas, that's why I'm saying, and I say it online in my LinkedIn.
Yes, continue.
And I put it on my LinkedIn that auditors, and I'm pretty sure independent reviewers, I know for a fact independent reviewers, and I'm not blaming anybody, I am just, and compilers, they don't know how to do the work. Simply, they are given a standard. No one explains the standard. There's no, the first time you realize that you are not complying with the standard is when you slapped with a fine or you suspended or something. And that's not the way to do things. And it's actually the very, very simple say, and that's what my book is all about, that I've given you all the schedules you need. You need no more schedules. So you need work. You need evidence. We are not taught in this country, unfortunately, between anybody is an audit file or an assurance file means only one thing. You don't need rep letters and all those sort of things. What you need is to identify a risk and respond to a risk. And what is that risk? The risk that the auditor won't find anything. So obviously what you do is I'll give you an example. So what is the claim by a client? A client says they own a motor vehicle. They have put this motor vehicle in the financial statements. What are you as an assurance provider got to do? You've got to prove that claim or you've got to refute that claim. There's no other way of doing it. So you go and get the license and registration and off you go to the car park. You walk into the car park, you check everything out. Yes, cool. The license is in the name of the owner and you've done an audit. Now, the independent still got to have the license and registration. What the difference is, you don't have to walk into the car park. Because what you're saying in independent reviews, if I did walk into the car park, it would be there. Because you know, client, I've seen the registration papers, I've seen the license, and there's the car. The chances are if I walked into the car park, it would be there. But I'm not seeing that in any independent review files. That discussion, for example, under independent review is crucial. It's crucial. Did you write the discussion down properly? And I know everybody has a discussion with the client, but do they write it down properly? Do they communicate what they did? And the same goes all about making sure that you write what's in your audit file properly, that you describe things. As you say, accounting is an information and a communication system. If you cannot communicate, unfortunately, you're going to fall short in an audit file. And that's not because you haven't done the work. All people do the work. All honest people do the work. But you haven't communicated it properly. And that's what quality is about. Not the fact that you do the work. Everybody does the work and they all discuss with the client. But did you communicate it to protect yourself? And that's what quality is all about. And urban reviews, they might be there to protect the public. But I think written between the lines as well, we need to protect and we need to help the auditor before we help the public. If the auditor is doing a good job, and let's see if he is, and then the public will be protected. And come soon. I don't know when it's going to be. Independent reviews are also going to be up for review. Compilations. And did you know that a compilation and a preparation are two different things, and these issues will come to the fore. But the issue here is what audit evidence or what evidence have you got that you did the compilation? It's not a trial balance and a set of financials. What evidence, what is quality? How did you do a quality compilation? What evidence did you document in a file to make sure that everybody knows you did the compilation, but you didn't prepare the financial statements.
Now you're raising valid
Because
points.
everybody will blame the compiler in the end. We need to protect that. And that's what quality is all about.
So I think I've been doing some work on tax practitioners and the Tax Administration Act requiring due diligence. Because we do see a lot of tax practitioners just accepting what the client is giving to them under the false understanding that they just like a post office. They don't really have to apply their minds. And maybe with all of this, hello, yes, I can hear you. Can you hear me? Hello, Stephen, can you hear me?
I can hear you, Nicolaas.
Perfect. So just to continue, it's about due diligence and applying your mind and being able to show your thinking processes. Stephen, if you can hear me, I just wanted to
Nicolaas, you there?
ask, yes, I'm here. I am here. See, I've typed the message. I can hear you fine. Maybe just check
okay,
your
because I couldn't
speakers.
hear you for a bit.
Hello, Stephen, can you hear me?
I can hear you.
Oh, perfect. Oh, perfect. So the question that I had is about due diligence and being able to apply your mind and being able to show how you applied your mind. I think I find this with tax practitioners as well, where they just accept what the client is giving them without just thinking about, does this make sense? And my experience with auditors in the companies that I'm involved with, I think it comes down to that first working paper about knowing your client and understanding the business model. What's your thoughts on that?
Well, the new ISA 315 makes you look at that business model. But what you said before about accepting what the client tells you, I'm willing to bet you that's about 95% of all auditors just accept what the client tells them without verifying. That is a no-no. That can land you, in, as far as the Auditing Professions Act, is 5 years in jail because you can get it wrong. And that's a criminal offense. The issue here is that's what people do. They don't go and verify what management tell them. Do you know what? They don't go and verify what the auditors say to themselves. You know, when the auditor has comments, they don't verify what they are saying. They don't even look at what they're saying true. They say, yeah, I know that the client's got a cash book, but have they actually seen the cash book? No, they don't. And that is the big problem. That's where there's a lack of evidence. They don't follow the standards. People, for example, even in an independent review and a compilation, how do you go about testing residual value? What they don't do is they don't know what residual value is. Because they don't know and they don't write about what residual value is, they come to the wrong conclusion that residual value is correct. They don't know what the word impairment means, so they come to the incorrect conclusion. You can't do a compilation, and you can't do an independent review, and you can't do an audit without your IFRS. They go hand in hand. Because the valuation assertion is the IFRS, and the measurement assertion is the IFRS. The other stuff, existence, is to make sure that you're not valuing something that doesn't exist or is not complete. You have to know your accounting standards, and that's part of my quality. What accounting framework? You'll see in my book, it's got all about the accounting framework. What IFRS questions are you asking? I've gone to that extent to help the guys because it's needed. I understand about time pressures and I understand about this and that, but it's better to do a little bit more, get paid a little bit less as usual, and to save your own career. Because there's a worldwide look for bad accountants.
Now, speaking about that topic, the focus that's on accounting, the auditing profession has responded by saying, no, it's not them, it's the owners or the directors running the company. Then the regulators respond by implementing ever more stringent and harsher penalties and more rules and regulations But from an outsider's look, it seems that the audit scandals, their frequency just increase, and then the size of the scandal also increases, simultaneously with the higher regulation. So anecdotally, you might say that the more regulations is actually driving the scandals. How would you address the issues in the profession? Is it a
Well,
lack
the
of
big
education?
problem is if auditors think that it's the client's fault, well, they don't know how to audit and they have no idea what they're doing, because auditors don't make the mistakes. Management make the mistakes. Auditors just don't find them. There's a big, big difference in the issues. Auditors don't find the mistakes. They don't know that there are risks of a mistake. And that's a big difference. Yes, directors make the mistakes. And I agree, that's not the auditor's fault. But that's not the auditor's job, because they think if they can rely on management, there's something else, there's also wrong. Because of their total reliance on management, they think it's always management's fault. But no, audit is about finding and locating and discovering the risk of material misstatement. And if you do that properly, you will never make a mistake. Well, I say people always make a mistake and you'll never get rid of that. But the less mistakes you will make, the bigger mistakes you'll make. And if you keep on blaming somebody else for your problems will never end. Auditors make mistakes by not finding the mistake. And they are not doing enough audit work, assurance work, whatever it may be, in order to find the mistake. Because their attitude is, well, if they can't see it immediately, it must be management's fault. No, management are cleverer than the auditors at this point in time. And the auditors are not finding them. But what, Nicolaas, let me just tell you about another problem. Auditors only audit what is given to them. And that's got to change. They can't just audit what is given. They've got to find what's not there as well. That's the key. And we are not, at this point in time, doing any of that. Our audit procedures do not, we recalculate depreciation and think, well done. That's the easy part of the audit. The difficult part of the audit is to find out what's not there. And actually, Zondo raised that. We're not finding what's not there, and that's the big problem. Should we be able to find what's not there? Yes, we should. I'm busy on a case at the moment where the auditors didn't find a problem, but had they done the right procedure, they would have found it. And remember, it's not about the auditor doing 20 sample sizes or 30. That's never a problem. It's what auditors and assurance providers do not do. They don't do the procedure in the first place. That's the mistake.
Now, on those mistakes, do you think more regulation is the answer or better education for auditors, or what is the approach?
I think you've seen my responses. I think we need nothing what is going on like now. What they're doing now is harmful. Education. Explain to auditors what they're doing wrong. Don't let a regulator come and say, you know what, you didn't do this. And then you ask the regulator why, and they don't give you a reason. You know why? Because they don't know why. All they're going to do is throw a standard in your face. When you go back to the standard, it doesn't make any sense. There is no explanation why the audit done wrong. They don't know. Because that's not our South African bully and to punish as opposed to educate. And I'll say that again and again and again.
Now, I'm also of that view that they want to do good, the regulators, but sometimes the options they choose might not be the best. And because it's easy to, if there's a big Steinoff scandal, I was in Parliament when that whole thing happened, and they had Marcus Jooste there, and all the protectors of the public were at a loss. How did this happen? From the banking regulators to the financial regulators to the auditing regulators, and everybody just wanted answers. And even then, I could perceive there's going to be an overreaction on more regulation. But I think it will be a good study.
when the public accountants or the Sarbanes-Oxley came out in America, George Bush said, "You'll never see another auditing problem again." Out came everybody following it, Auditing Professions Act. We've seen more problems with Auditing Professions Act and Sarbanes-Oxley than ever before. And why is that? It's not that they're finding it out more. It's that they're happening. It's happening. It's still happening. It's not about that they're finding it more, but they shouldn't be finding it more if the rules and regulations are there. But there's something wrong with the rules and regulations. And what is that? If you want to apply the big stick, it's not going to work. Teach, educate, and tell people why and what they're doing wrong.
I saw this with, again, Steinhoff.
That's what my book is all about. To help people with that.
With Steinhoff, when the auditors missed everything for many, many years, and then but there were many financial analysts that were outside the company just looking at the economic numbers and looking at the business model and saying, but it's impossible for Steinhoff to have this revenue based on their business model. And so they were out with this news 2 years before the auditors. Is there a mismatch between being so technically acute as an auditor but just missing the bigger economic numbers?
The auditors just don't know how to audit the risk. There are many statistical packages, and I use them currently on my own audits to determine the risk of material misstatement of financial statements. I've done it in Steinhoff, it worked. I've done it in a lot of companies, it works. They did it on Enron, it worked. They are not doing the proper analytical procedures as they should. Ratio is the auditor's biggest procedure. That's nonsense. Analytical procedures, not looking at last year versus this year and whatever, and developing expectations. You need to use proper analytical, and they're out there, the DeChow model, the Benesch model, Altman Z-score, all these things are there for people to use. I've tested them myself. And in fact, I've got a paper on the Joneses model. The Joneses model proved that auditors do not know what they're doing. And I know that's a big assumption, but I'm prepared to stand by that assumption, because I'll tell you why I'm going to stand by that assumption. If the biggest firms in the world, the best of the best, are not doing it properly, well, then what chance have others got to do it properly?
Look, it's a very tough profession with clients don't want to pay more fees. You being reporting to the persons that's paying you, which is an issue on its own, and the regulator with a lot of penalties. And now to make things even more interesting, and I saw you read a comment about it, the new auditing proposal for smaller or non-complex entities, audit light, if you will. What is your views on those? On that?
That's a disgrace, man. I mean, I'll say it publicly. It's something we shouldn't even be being attending to. We've got the independent review, and at the end of the day, an audit is an audit. And the size and complexity of a company should not determine whether you have the way you audit. Audit should be the same no matter what the size or complexity of the company. It's clear.
You're raising an interesting point, the size and complexity. I wonder whether there was ever a study before they made the proposal for the new standard to determine if there's a correlation between size and complexity and audit risks or audit or business failures, because it might not just be the case that it's so.
No, there is studies that audit fees increase firm, and sometimes, but it's related to audit fees. Audit fees increase related to complexities, but the audit will not change. There's no study on whether the audit procedures will change, because your audit procedures are scalable to the type of company you've got. And so there's no need for the standard, absolutely no need whatsoever. We've got the independent review.
I agree with you. There is the independent review, but there's a lot of negativity in the market, I suppose, driven by the larger auditor firms not wanting this review. But because I don't think it's properly utilized.
But Nicolaas, just wait until this standard comes out, if it does. You'll have A auditing and B auditing, higher grade auditing and standard grade auditing as well. The same thing will happen as if it was an independent review, as a lower form of quality. But do you see what I'm saying?
So a lot of communication is necessary.
We don't recognize this. Nobody sees this. Or is it just we issue standards willy-nilly? Couldn't they see beyond whatever they were trying to do? Which we don't know what they were trying to do.
When I've heard the bigger companies, if they want to develop something new or innovative, I think there's a book, it's called The Innovator's Dilemma, that they need to create what they call skunk works. It's like something that's within the regulator, but allowing it to think alternatively. I think when you're in a regulator, you wear a certain hat and you use your glasses in a certain way, and you see the world like that. They should allow for alternatives.
Yeah, no, the regulators definitely see it differently towards, let's say, normal, traditional citizens. They definitely do. Their job is not to help you. Their job is to the Auditing Professions Act. It's to protect the public. We're not interested in protecting the auditor, but in not protecting the auditor, they're not protecting the public either.
But that's also an interesting concept that I've been thinking about. Who is the public and what is the public interest? It's one thing to say it in an act, but you have to discuss it and research it and present it in a way that is meaningful, because even within the public, there's different interests. There's not just one public interest. So that's a very difficult.
And making fines currently up to 30 million rand or 25 million, they're closing the profession down. I mean, if you fine a small practitioner 30 million rand or something, it's the kiss of death.
Yeah, what they inadvertently is going to do is to concentrate the profession. Eventually, there'll only be large firms, which is
exactly
opposite to what they actually want.
But if they do want large firms, well, that's fine. Then let them do that. But they must come out and say, yes, we only want large firms. And then everybody will have a chance to do something else. You know, they must be straightforward as to what. If the quality is what it is, I don't know, they're doing nothing about quality. A fine of 30 million rand is not going to help anybody's quality if they don't know what they're doing wrong. Education. We come back to education again.
You're quite right. It's education. Because you cannot, we need auditors, and we need the auditing profession to be vibrant with a lot of auditors involved in. But you can't now make it a world that they don't want to operate in. So I think there is a Kudesa needed for the auditing profession, or a conference, to really unpack these things instead of just a regulator issuing standards.
But I think it should be for the entire assurance industry. What do we mean by assurance, et cetera, because it's become very foggy and confusing for me.
No, you're right. No, you're right. You made a good point right at the start. Even a compilation is an assurance because you're putting your signature on the paper.
Nicholas, for IFAC to say that compilations are not assurance, you know, it's I don't know. It's beyond me. The minute a practitioner signs a report, well, why are you interested in that report? Because Mr. ABC, this firm signed the report, and we trust that firm. What is that? Assurance.
It is. Now I agree with you.
And you know what? You can sue the compiler. Assurance.
No, I think what we need is a big conference and discussion point where we can freely discuss these issues and not hamper the auditing profession, because we need that profession and we need auditors. But Stephen, that is the end of our.
By the way, I believe they have these things, but none of us are invited. It's very special, few professors, etc., etc. It's a very, let's call it a small group, chosen group that go to these sessions.
We'll arrange our own conference and then send them the results. But Stephen, thank you very much. It's
exactly,
been so exciting.
100%.
It's been nice talking to you.
Because what is happening, nothing's happening to help. That's why I wrote my book, Nicholas, is to help, because no one else is helping.
No, absolutely. I totally agree with you, and thank you for that labor of love. And yeah, I can see your whole being is in the profession, and South Africa really needs more of you. So thank you very much for this interview. I'm sure we're going to do a follow-up interview. Any last messages for our audience?
Guys, there is a message. Do what you think is right. Do not listen to other people, because if you listen to other people, they will tell you every different thing. If you've got your own guide, don't follow the rules. Follow what would get you like this. What your job as an insurance provider is to identify risk where you are not going to find anything. And you're going to get into trouble for not finding it. Identify that risk. And then find a way that if you're not going to find it, find a way how you're going to find it. That's what you have to do. Because auditors don't get into trouble for not having a rep letter and all that. That's not the criminal part. The big issue is that you don't find the evidence, and the evidence is there. So you identify risks. The risks are residual value. That the client's got it wrong and you don't know they got it wrong because you just accept it. Things like that. Worry about how are you going to identify the errors made by the client in the financial statements. Even though those errors are not your fault, if you don't find them, they become your fault. So worry about risk and evidence. I can only say it's all about refuting or proving an assertion. Nothing else. If you can do that, then you've got quality. But we don't do that.
Thank you, Stephen.
We just don't do that.
I enjoyed our conversation. We're going to have you back next time, and I'm sure the audience enjoyed it just as much as I did. Thank you very much.
My pleasure.
What do our defining moments look like? Just like this moment right now. They look like pride after achieving that long sought-after goal. All the small victories along the way that didn't feel momentous until we saw them in the rearview mirror. They look like the courage it takes to take that first big step. All the times we fail and rise again. And without even knowing it, cultivating an inner strength that is contagious along the way. They look like the inspiration that comes from knowing that we are not alone. They look like the human relationships that give us wisdom beyond what data ever could. They look like the curiosity that comes from exploring, that allow us to create and contribute. They look like education that unlocks our full potential, using our knowledge for impact. They look like choosing our own definition of success, over hiding, over hustling, over pretending. They look like others showing up and recognizing our efforts after all the times we already showed up for ourselves. They look like being bold enough to be extraordinary. They look like you. Right now, right here. First, we help you see your defining moments. Then we help you seize them. We are the accounting body for everyone. We are the accounting body